Facebook, or Meta stock, has been absolutely clobbered the last few months, and yet now there's a trickle of news that their advertising business might be reaccelerating. If that happens, could that mean that the Facebook stock has officially bottomed and that now we're going to rally higher? I'm going to talk about the latest news around Facebook's advertising business. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did own stock in Meta Platforms, or Facebook. FB is the current ticker, will be Meta in the future. So I previously did a video calling out their fourth quarter 2021 results, their weak results that ultimately caused the stock to drop so significantly, partly because a very gloomy outlook, seeing soft growth in the year in the first quarter, talking about high single digits, low teens, and also seeing their profits potentially drop in the year ahead. And also, I'd say another key concern is that their US and Canadian users in the Facebook daily active users group actually stagnated, was down in the fourth quarter. Now it's flat year over year. So it does make folks wonder, given how highly monetized this US and Canada, tier group is, effectively, will these users keep declining in the quarters ahead? And that could, seriously impair Facebook's business if that's the case. And so another core aspect that was hurting Facebook stock more recently is around this iOS impact, where starting the second half of 2021, Meta faced strong headwinds as Apple's iOS 14 privacy update around their app tracking transparency lowered the return on investment for ad spend on Meta's platform. So effectively, customers or companies that wanted to find new customers, they would spend on Facebook and they would say, hey, am I getting an attractive return on investment for the ad spend on Facebook? And they saw that return on investment drop precipitously as users, saw this privacy update with Apple, and they said, no, I don't want to participate. No, I don't want this data. And so all of a sudden, the return on investment just declined. The ad spend wasn't nearly as effective. And so then a lot of these customers for Facebook started pulling back their ad spend. So this was an Apple-induced privacy update that seriously hurt their business. Now, part of the skeptic in me says, I wonder how much of this is truly about privacy and how much of this is just a land grab, an ad grab by Apple. The Financial Times has similarly called out how they have this in-house business called Search Ads, which is their own version of an ad space, for different, apps that you might want to install into your app, and how app providers can effectively have an advertisement to get you to click on it if you're interested. And so supposedly Apple has seen a huge windfall from this privacy change, where they've seen their business triple in 6 months. And Facebook management has also confirmed that the impact from Apple's policies has lowered their 2022 outlook by $10 billion. And while Facebook is a behemoth, $10 billion is still a significant part of their business. It's a little under 10% of their 2021 revenue. But look, that's a huge hit to their business, $10 billion. So when I recently saw news that advertisers were seeing a recovery on their Facebook ad spend, I knew this could be really important. I was like, what? Like recovery, like these advertisers might actually want to start spending more on the ad platform because they're seeing a better return on investment. And so this was an article from The Information calling out how a couple of different users for various different apps, for example, one person who has a DaVinci Eye app saw, cut his Facebook ads, spend by about 90% to less than $100 a day, because the Apple, privacy change made it much harder to effectively get new users for his app. Now, what ended up happening was that for some reason in the recent weeks, the cost of acquiring that new customer unexpectedly began to fall, and the performance of these ads, effectively the return on investment for the Facebook ads, went way up. And so once again, as it's a very reasonable, very capitalistic type pattern. You have a high return on investment, you're going to move capital that way. If you have a low return on investment, capital is going to leave. It's not going to be interested until, once again, the return on investment gets compelling. So here it is in the last few weeks. It's interesting to hear these sort of stories from various different advertisers, various different businesses saying, yeah, the return on investment has actually crept back up. We're moving ad spend back. And it's really interesting in this particular case, talking about a 90% decline in ad spend on Facebook platform, then bumping it back up to $1,000 per day for the, his drawing app. And this does reflect like, look, it's just how dramatic some of these, customers can effectively move a 90% decline in how much they're willing to spend just because the return on investment isn't there. It's really significant. Just interesting to watch. But the reality is this is a helpful data point, but I don't want to lean too heavily on it as it's anecdotal. The reality is they have millions of advertisers, and there are millions of, effectively small businesses that were impacted by this. Back in 2019, they talked about 7 million advertisers. That number has gone up significantly. So I would want to see a metric, rather than, relying off of these articles that say, hey, this business saw a huge return on, a huge increase in the return on investment. I'd rather see some sort of metric to show, hey, here's Facebook's broad-based return on investment ad, driven performance. And you could see that, yeah, it's trending up over time, or yeah, it's a 30% return on investment, or what have you. That does give you this confidence. Oh, okay, this ad platform is going to remain or continue to be strong in the months and quarters ahead across their millions of advertisers. What's my take as I think about Facebook stock in the months, quarters, years ahead? The reality is that Facebook is fighting not only Apple's privacy changes, but also competitive threats leading to less user engagement. They called out TikTok in particular. You're looking at tougher e-commerce landscape as well. I mean, look, yes, Apple was a real hit to their business. This privacy change was a real hit, but arguably inflation has also hurt their business more recently as well, as effectively consumers have less money to spend on discretionary purchases when required items like groceries and gas are jumping higher. So whatever, widget spinner you're buying online, you're a lot less likely to click on that ad and ultimately result in effectively lower return on investment for the ad spend. And so advertisers won't be spending as much on Facebook. You do see that sort of behavior. Now, management does seem to be leaning in on the Reels product. That's their fastest growing short form video format. This was designed to combat clone TikTok's presence. Currently has around 62% of US monthly active users engaging with it. They've rolled it around the world and I think in around 150 countries. So they are rapidly leaning into this to sort of re-engage users. But it's unclear to me how Meta, Facebook, whatever you want to call it, their ad spend in general will hold up in their current economic environment. The reality is you are seeing this sort of economic shock with higher interest rates potentially, as well as commodity shock. How will that affect continued ad spend for their platform? It's also unclear to me whether users will be coming or going in the future. Has this platform seen its best days? Are its best days behind it? Or will they continue to grow their family of apps? It's a real question for me. This uncertainty is also arguably why it's one of the cheapest mega cap stocks out there, trading around a low teens earnings multiple, and is hopefully buying back a ton more stock at these low prices. A lot of folks talk about the price of admission, and I think this sort of uncertainty is the price of admission with Facebook stock. Now, you also have to absolutely judge, how do they perform? You have to judge, are these uncertainties performing in an unfavorable way? If so, then you reassess. But I'd argue this is sort of the cost of admission, this uncertainty. Unlike Google, which I've also called out as a stock I own and like, I don't have strong conviction around some of these questions, so I'm not looking to scale up my position. It's relatively, it's not a huge position for me. So if management executes and they're able to retain users and grow in the years ahead, it definitely is possible to see an exceptional return from here, maybe a 20 to 30% compound rate, because the reality is they do generate significant amounts of free cash flow, around $40 billion in free cash flow, that if it's not all going to their Reality Labs bet, that could be a nice return for shareholders. And think about it, 40 billion potentially going to shareholders on a $600 billion market cap stock. That means you could be buying back, let's say 6-7% of the stock per year. So that could be favorable. Plus, you got to lean into the fact that they also have 50 billion in cash on hand. So they definitely could be amping up that buyback at the current prices. That would be an example of judging management. Will they be doing the prudent thing? Did they just buy a bunch of stock when it was at a high price, or are they leaning in now that the stock price is lower? I'm very curious to see that in their first quarter. Let's see what their conviction looks like into this business. And so a lot depends on management's execution. If they do, you get that sort of base, level of, free cash flow potentially to shareholders plus any sort of incremental growth. And just think about how these things work out. If you have, let's say, 6-7% buyback, layer in maybe 5% growth, all of a sudden you're looking at a low teens, percent growth from here, 5% plus. And so that does start saying, oh, that could be interesting. Plus, you might get whatever sort of valuation expansion if people say, oh, wait a second, this business is going to be around for the long term. Users are not absolutely, going in and out. They're not leaving the platform. They're staying. Facebook continues to find new ways to make sure users are engaged, like that Reels app. And so these are the metrics to judge Facebook/Meta to see if they will execute, that combination of buyback. Will they have nice organic growth in the quarters ahead? Now, keep in mind, this is a hypothetical framework, so of course the stock price can go way higher or lower. A lot depends on the execution and the sentiment. Once again, it's trading around a low teens earnings multiple, so a lot of this uncertainty is currently baked in, but it's warranted. Now, keep in mind, as I look at this is giving credit to their family, their family of apps, not including Reality Labs, which is losing them to the tune of $10 billion plus a year. So giving zero credit for that, giving full credit to their family of apps, which they continue to find ways to monetize. So if they're able to continue to do that, yes, there is the potential for really attractive potential annualized returns, let's say over the next 5 years of, let's say, 20 to 30% annualized returns potentially in the years ahead. But once again, a lot depends on how will they perform in this economic environment, what will happen with users, and also the optionality with Reality Labs. If Reality Labs is successful, maybe you have huge upside further from there. We will see. I'll continue to update you if this video talking about the potential turnaround in Facebook's advertising business has been helpful for you. Please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.